So you spotted manipulation, you've seen a higher time frame target get exposed in the market, and now you're looking for your entry trigger. And what we're looking for is a structure shift. This is probably the most important content in this whole series because we want to be able to time our entries in the market as effectively as possible. So let's look at the different types of structure shift. So there are three types of structure shift that I'm happy to use when getting involved in a trade. But again, they all need to be in context of higher time frame manipulation and looking to distribute towards higher time frame targets in the market. So the first sign we're having a structure shift is the formation of an order block in favor of our trade. So we've seen manipulation, we have an opposing order block, which we can use as the first creation of demand or supply in the market that will drive price towards that higher time frame target. Secondly, and this is a common shift that I'm looking for, is an order flow shift. So this is actually the creation of counter trend order flow, new price legs in context of higher time frame candles, again manipulating towards higher time frame targets. Then market structure shift. So this is where we actually see a break and close above or below a previous swing point. When we talk about swing points, this is essentially the highs and lows of our price legs. Again, all of this needs to be in context. So let's look at a couple of visualized examples and then get onto the charts. So this is what a potential order flow shift and market structure shift will look like on your charts. So we have bearish price action, whereby we have a order block, so the last buy to sell. Then we get the creation of a fair value gap, an inefficiency in price. So for continuations, we're looking for a fill of this internal range liquidity and then the next candle to distribute lower. But what happens? We get bullish aggression into this bearish price leg. In doing so, we create new order flow. So we have sell to buy, inefficiency in price between candle 1 and candle 3. However, we still have these swing points in play. This is still at this point the swing high because it hasn't actually been closed through. But we have order flow opposing the previous bearish order flow. So if this is in context, it's very interesting because this is our first sign of structure that we can use to take longs in the market. So this is looking at order flow. When do we get our market structure shift? Right here, because we get a candle close through the swing point. So this is then our market structure shift. What to look out for on the charts? Higher time frame manipulation. Always, always, always. Then we're looking for counter trend price leg formation. So firstly an order block, then order flow, then market structure shift, which is a break and close above a previous swing point. And again, we always need to align with higher time frame targets. So let's look at a couple of examples on the charts. So let's bring up our 1 week price action in conjunction with our 12-hour time frame. So we're swing trading. We're taking entries on the 12-hour time frame in conjunction with weekly, 2-weekly, and monthly trades. So if we're looking at, first and foremost, the fact that we have confirmed distribution in play. Why is this distribution? We have price manipulating and closing inside a previous 2-week candle range. So we now have an exposed low in the market that price is looking to target. We're going to distribute to the low. So when we get onto the 1 week time frame right here, we can then start to take entries in context. So we see price sell off. We then see weekly manipulation of a previous candle range. But we know the higher time frames are distributing lower. So we need to wait for confirmation to get involved in shorts. And what we see is this corrective pullback right here until we sting in to the high of the weekly or previous weekly candle. Then what we get is our first type of structure shift, which is the formation of an order block in favor. So price runs in to the previous week high, then sells off and creates an order block right here. So I'll mark that, and you can see it's the last buy before the sell. Soon as this candle closes, it closes below the buy candle. So you see how the next candle then stings into the order block and distributes lower. So this is our most risky entry because we're not seeing order flow, we're not seeing true structure shifts at this point, but we do have context. We have a liquidation, we have targets in play, higher time frame targets that we can aim for. So this plays out for a 3.5R trade. So after this, we then bring up the 2-week time frame again. We see another accumulation candle that gets broken out of. So price trades up and takes the external range liquidity at these highs, then closes inside its previous range. So at that point, we then again expose a new target in the market, which is the low of the 2-week accumulation candle. Then we drop onto the weekly time frame. So what we see again is that we have conflict because we're seeing that the weekly candle did not distribute to the low. It swept this low and started to reverse. So what are we waiting for? We're waiting for something to tell us distribution is starting to continue. So price then runs into the high of the previous candle. So we see right here, we get a weekly manipulation. We broke out of the previous weekly range and we closed inside, but we still have bullish order flow. We have price legs moving in a bullish direction. And you can see this is a sell candle followed by a buy. And there's an inefficiency in price right here. So let's actually look at that. We can see this is the swing point. This is the order block right here. And we also have a bullish fair value gap, an inefficiency in price. So for longs, what we're looking for at this particular point is price to trade in, fill this internal range liquidity and continue higher. What ends up happening? We get a dump. This is a true market structure shift. So order flow is created, but we're also shifting structure. Why? Because we've closed through a swing point. And in doing so, what do? We create a new bearish order block, buy to sell, and then we also create a bearish fair value gap, the inefficiency in price between candle 1 and candle 3. What does price do? It fills the inefficiency and then continues to the confirmed low in the market. So you can enter from the fair value gap, cover the highs. We're going to talk about stop losses in the next video. And then you've either got a 1.4 to the low, or if you want to try and hold for a 2 or a 2.5R, you eventually get that. Now let's go back to our sort of headline trade that we have based this series around. So we have our weekly order block right here. This is the last sell on the weekly before the buy. We get a close above the order block. If we confirm this on the 2-week time frame, we see that price on the 2-week time frame has broken out and closed above its previous 2-week candle. So now we're looking for something to help us get involved in a bullish trade. What we see is, as we've covered, price start to sell off. We get price trading into internal range liquidity, dumping, into internal range liquidity, dumping. Then we get an order flow shift. So why is this an order flow shift and not a market structure shift? So we have swing point at the high right here. We have order block, the last buy before the sell right here. Buy to sell. We also have a fair value gap between these two candles. So if we're looking at sells, we can see that price is going to fill this internal range liquidity and then continue lower. But again, what happens? We get a very strong up close candle. We then continue higher, see resistance from the swing point. But in doing so, what we create is a bullish order block, which we can mark the last sell to buy, and the creation of order flow between candle 1 and candle 3. We get a bullish price inefficiency or fair value gap. So now we have an order flow shift. We have order flow in, order flow out, and we can use this shift in the market to get involved in our long. Where are we targeting? The completion of AMD, accumulation, manipulation, distribution, and that plays out for a 2.57R. So that is how to use different types of structure shifts to get involved in high probability trades. Always trade following manipulation towards higher time frame targets in the market. If you can master this, you can become a very profitable trader. See you on the next video.